Hi everyone, let's look at my medium time frame and low time frame scenario, starting with the bullish scenario on the medium time frame where the low of the bear market is in, and this impulsive structure is part of a wave 1, followed then by a corrective structure in a wave 2 before a very big impulsive move to the upside. Currently, price has been ranging for a while inside the most common target area for wave 5, which is between the 1.236 and the 1.618, pulled from the high of 3 to the low of this wave 4. The potential trading setup of this scenario is entering the shorts in this area, stop loss safely above and then trading it to the downside, with of course the invalidation being if price moves to the upside on high volume, then more likely the medium time frame very bullish scenario that I have will get into play, which I'll show you in a second. For this wave 2, the most common targets are the 0.5 to the 0.786 fib, which is basically between 21.4k and 17.8, 17.7k. By far the most common target is the golden pocket, which also has nice confluence with this low over here for maybe a little bit of a liquidity grab before then moving to the upside in a very impulsive wave 3. If we then look at the Fibonacci times that you see, the vertical lines, the yellow ones, these are pulled from the low to the current high that we made. And usually a wave 2 will take at least 38.2% of the time it took to develop wave 1, which is the 4th of May. So one can expect wave 2 to take longer than the 4th of May, and the 1-to-1 is currently sitting at the 17th of July for maybe then a low inside this area over here for then a big push to the upside in a wave 3. If we then look at the bearish scenario, which is the red count, we have a W over here, then an expanded flat in the red X, and then we would be looking for a 3 wave in a wave Y. The targets for a wave Y are a lot deeper, at least taking the lows over here, but more commonly between like 13 and 9k. The trading setup, however, is exactly the same, because if wave X is an expanded flat, with this being an A, B, and then an impulsive C wave, we are currently in the most common target area for wave C as well. We are in the most common target area for wave 5 as well. So the trading setup for this potential bearish scenario is exactly the same, stop loss above, trading it to the downside. The only difference is the time it will take for wave Y to develop and the length of the trade, because instead of the target being here for wave 2, the target would now be down here somewhere for a wave Y, which of course is a much bigger trade. Time-wise, it will take a lot longer, because you can expect wave Y to take at least 0.618 time compared to wave W. So these fib times over here are taken from the all-time high to the low of W and then put on top of wave X. And the 0.618 at the moment is the 5th of August this year, with the 1-to-1 being the 28th of October this year. If we then go to the very bullish scenario, and I'll switch to the 4-hour time frame here for a second, wave 1 and 2 are already in. So we have the yellow wave 1 over here and the yellow wave 2 over here. So if I zoom out a little bit, this is the impulse and then a 1, 2, 3, 4, 5. This is not my preferred scenario because wave 2 over here is very short. It's basically 0.236% of this wave 1 fib time wise. So the fib time pulled from the low over here to the high that we made. Toggle on the 0.236 and you'll see that this wave 2 was finished right about the 0.236 fib time, which is very, very short for a wave 2, as usually it takes still at least a 0.382 fib time. Now, if we then do zoom in a little bit, because of course this scenario is still valid and we have to take it into account, we have a potential 1-2 in green and then another 1-2 in blue before we then expect a lot more upside to come. In this scenario, this wave 2 in green, however, and that's unfortunate, it didn't hit the 0.382. It actually just missed out on hitting the 0.382. Now the 0.382 for a wave 2 is already a rare target, but not hitting it is of course even more rare. It is possible in a very bullish environment, so we definitely want to see a lot more upside to come, and we don't want to see price drop below this level, as that is a clear invalidation for this scenario. The lower time frame over here I'll get to in a second. If we then go to the lower time frame count that I have over here, then wave 5 is already finished. The high of wave 5 is over here. So then the last impulse basically is a 1, 2, 3, 4, 5 with wave 5 ending over here. And then we are now in a corrective structure. So we have then a 3-wave W, expanded flat, then an X, and then we had a Y. As mentioned in previous videos as well, the target area for a wave Y is this target area over here, and the only way this could have been traded is as a swing failure pattern trade, as mentioned as well, and we got that, which is very nice. And then in this scenario, this is a WXY and then an XZ. And I want to highlight this scenario also because of, well, stuff that I've seen online, that we see price moving to the upside with a lot of volume. And I said in my morning update earlier today that, of course, Wave X has, first of all, many targets, many different fibs, including the 0.886, by the way. But this scenario, this target area over here was quite attractive, as there's quite some confluence coming together. And then we have this potential trading setup around this area. However, I had 3 different bullish scenarios to the upside. I had this one for a potential WXYXZ. I had the very bullish scenario where we just expect to pump for a lot more upside. And I also had this scenario with this being an A, looking for a B, and then a C. So basically I have 3 targets for the longs. I have wave X as a target over here, a potential wave B target over here, and then of course the big wave 3 target all the way to the upside. And this is important because all of these longs setups, these potential setups and scenarios were based on the balance that we got over here. And then it's all about how is price moving to the upside? What are we seeing? What are we looking for? Because if you see such a big push over here with also increasing volume, if we toggle the volume on, you can see we moved to the upside over here. Volume was increasing between this push over here and this one over here. Then obviously this is not a short. Yes, it was a potential short setup based on Elliott waves because it's purely educational as well, hey guys. It's a WXYXZ, and if this scenario is true, this is still quite an interesting short area. But seeing this push over here, of course there's no way one wants to short this at that particular moment in time. Also on this channel we don't catch knives, we don't FOMO, and we don't YOLO, and trying to short such a high volume move to the upside is a catching knife type of scenario. In this scenario, however, the invalidation of this scenario, basically wave X for me, would be to take the high of this wave X over here. The 0.886 is still a potential target for a wave X over here. However, I do have to say we have been ranging around this 0.886 for a while, and also we could count this as a potential 1, 2, 1, 2, 3, 4, and then eventually another move at least to the outside, upside to then take this double top. So shorting over here, not too confident at the moment. I just wanted to talk about this scenario to explain about the push over here and the difference between the different targets for the longs and the potential short setup. So if we then go to the very bullish scenario, as promised, I would go into a little bit more detail. We have this wave 1 again ending over here, the blue wave 1, and then a WXY in a wave 2 before we now expect a big move to the upside in a wave 3. In this scenario, the entries could be over here at the 382, which is a rare target for a wave 2. So, you know, it's quite uncommon to start entries over here. The stop loss is also massive as the invalidation is literally below this low over here. So the risk to reward ratio of this trade is not very good, and it is better to wait for what happened over here, which I'll show you in a second with the swing failure pattern trade. So yeah, we want to see high volume to the upside. Of course, volume now is increasing at least a little bit. We have a little bit of a bullish structure as well, which is good to see. So let's see how this will develop. It will be very, very important to see what price is going to do if it is going to take these highs. If price is going to take these highs and it just pushes to the upside, that's of course what you want to see in the very, very bullish scenario. If we then go to this scenario, the ABC, we have wave 5 again ending here. We have a WXY in a bigger wave A. So this then is a wave A, 3-wave structure. We would then be looking for a wave B before then a wave C. Now, if this is a wave A, wave B has to be a 3-wave structure. So that means that what we are looking at right now is only the first part. And I gotta be honest, it's quite a high first part. If this is an impulsive structure, what it looks like at the moment, then wave B needs to be some sort of, well, at least the first part of a wave B needs to be a zigzag, which is a 5-3-5 scenario. But we already went pretty high. So if wave B wants to be a valid target area, like the 1.236 and the 1.38 is the most common target area for wave B, which is currently between 29K and 29.4K, price needs to retrace relatively soon and also quite deep, because the target for a zigzag ABC, which then is an ABC, wave C tends to be the 1-to-1 of this wave A. So yeah, it needs to retrace quite deep to make sure the 1-to-1 is inside this area. Currently, this scenario with wave B over here doesn't look the most likely. You definitely want to see a bit of a bigger retracement. Besides the fact that if this wave A took this long, then one would expect wave B to take at least 0.618 the time of this wave A usually, if not 1-to-1. So then you would expect wave B to finish like, I don't know, somewhere over here. But looking at how quickly we went up, that is quite unlikely. So I want to talk about this scenario, and of course this is the swing failure pattern trade. So yeah, it's in profit, it's nice, we're enjoying life, but I'm not sure if wave B over here, if this can be a potential short setup, because we already went so high. So we have to see how price is going to develop in the upcoming days. And we had a double bottom over here for then the potential swing failure pattern trade. And also before all of this happened, of course, I was already talking about it. The only way to trade this is dipping below, closing above, entering, and then to the upside we go. So yeah, bullish. We're still in bullish market structure on the higher time frames as well. So of course the bullish scenarios are in some way preferred, but we shouldn't at least close our eyes for the bearish scenarios, which is this one over here. So this is the one bearish scenario that I have besides the WXYXZ, where in this scenario, this is a wave W or a wave A, and then an expanded flat, another zigzag over here, and then another zigzag down here. So it's a 3-wave structure, and then a W or wave A. We then have an expanded flat in wave B or X, meaning a 3-wave in A, 3 waves in B, and then a 5-wave structure in a wave C. The target box for this white wave C in an ABC is between these two 1.618. That's the most common target area for wave C. And what I personally really like is that this double top target area, which is just very interesting to take liquidity, is inside this target area. So preferably I would like to see price move to the upside, take the liquidity, and then continue to the downside in this particular scenario, either in an impulsive move to the downside in a wave C or a 3-wave move for eventually wave Y. Now then, of course, the potential trading setup of this scenario would be something like this, entering around these levels, the double top, and then trading it to the downside. Of course, again, guys, we do not catch knives on this channel. If we just push up, there is no way this is going to be any sort of a potential short trade. So these are the scenarios that I wanted to show on the lower time frames, which I think are very important. I spoke about the WXYXZ, where currently we are finding resistance at one of the targets for wave X, but I wouldn't mind going up just a little bit for these double tops over here. The very bullish scenario, the WXY in a bigger A, followed then by a B and a C, and then finally ending with the more bearish scenario. I hope this video was helpful or valuable to you. Thanks for watching and subscribing, all of you, closing in on the 700 subscribers. It's going really fast, and I will see you at the next one. Bye bye.